Hey, it's Soleil, and this is episode 107 of the Orange Pill Investor. And today I'm just going to do a short recap for the week's trades. Start with the main account. Dangerously thin on buying power. This is a margin account. So while I've been posting that I'm terrified of MicroStrategy's upside, which is why I did not carry any covered calls. So these April 26th covered calls expired worthless today. So I pocketed 4,600 on those. And I won't put covered calls on again until after MicroStrategy earnings Monday after the close. And will be a nice bonus if that gaps up, which is, what I'm afraid of and why I'm not rolling these calls today. However, stocks can always disappoint as well. I mean, even when there's a positive earnings, the market can just react unfavorably because if they thought they were going to be more positive earnings, then the market's disappointed and everything crashes. I think Punter Jeff and Raekwon have been posting about the increase in short interest, and eventually those folks are going to get wrecked, but it doesn't mean they're going to get wrecked every time. One guy was bragging about how he shorted at 1,700 and covered, like a week later or whatever. But that's kind of a ticking time bomb, I think, for some of these people. And it almost just seems like a rope-a-dope, or a pool shark that lets you win the first one or the first couple rounds, and then they hit you with the double or nothing, and then they continue and they proceed to just fleece you. So it just seems like a ringer situation to me. But it does not mean just because I'm anticipating for and hoping that the price goes up doesn't mean it's going to go up. The market, what is it? The market can stay irrational longer than you can stay solvent, something like that. So I am flirting with danger a little bit, trading with margin in the first place. However, I've got about 20 grand in Tesla that I could liquidate if if MicroStrategy takes a dump, and MicroStrategy is my primary asset right now. I'm still a firm believer in Tesla, but I'm way more psyched about MicroStrategy at this point. So I would be taking some small profits in Tesla anyway if I had to do that. So wouldn't make my day to have to do that, but definitely have some non-MicroStrategy holdings that I can kind of counterbalance if MicroStrategy goes south unexpectedly. And I picked up a few, cheap shares of MicroStrategy, was it yesterday, and didn't anticipate my margin collapsing. So this was actually like a negative $2,000 balance. So I went ahead and sold the 3 shares that I bought right back. That'll just end up being a wash trade or whatever. No big deal. And then sold. I had 6 of these leaps, these Tesla leaps. So I closed 1, and that gave me a little bit of breathing room. Also have some liquid, stuff that I could do outside of this account if for some reason MicroStrategy really just wrecked this account hard and I ended up with a margin call. I do have, some other liquid sources that I could bring in. So, it's never financial advice, but I also don't want to make light of trading on margin. It's dangerous as shit, and if I didn't have other liquid assets, then I would not be this levered. Let's put it that way. So I don't prescribe what others should do, but I will say, exercise caution. And if you're not extremely careful, then maybe margin is not a wise decision. So, with that being said, still hopeful for Monday. I'm hoping they use the new FASB rules, and I'm hoping it surprises the ever-living shit out of the market. And that would definitely give me a little bit of breathing room on the buying power. So, just rolled my piddly little couple hundred shares of Riot here. It's not piddly necessarily, but compared to how much I have invested in Microstrategy and Tesla, it's like 1% or something. So that's it for the main account. The 5K challenge is good news and bad news. Well, I mean, it's all good news this week. So up 20%, which I am definitely grateful for. But it is a cautionary tale of when the market gaps down on you, and then you have a couple of choices when the strikes where you can actually get decent premium are below your cost basis. Then you either have to sell and collect decent premium and run the risk of losing money, which is what I generally decide to do, or you get stuck bag holding and you're just like, oh, okay, I'll wait for the price to come back. The price doesn't always come back though, because it could be like Nokia when the iPhone came out and it never comes back. It could be probably like Nikola, where the founder, or CEO, or whatever the hell he is, gets fraud charges and, convicted. And, that stock may bounce based on like interest rates or macro. Like if the whole market goes up, it may pump or whatever. But that fucking company is doomed. And it doesn't make any sense to bag hold a company that's just useless. However, so I had rolled Riot and I had rolled HUT out to 531, and HUT bounced back to 860. I think my strikes were like 9 something, and so I did have to pay a little bit to roll this from the May 31st back to next week, but I'm back to the weeklies where I like it, and I should be able to recoup that over the next several weeks. And then I went ahead and left my Riot 9.5 for 531. I'm just going to let that marinate, and Riot is up to like 11. So with my buying power kind of dwindling, I had to pay, I don't know, probably $400 or $500 in order to roll these calls that went above my strikes. And that's the bittersweet part about selling covered calls, is what you want is if you sell the $12 strike, I mean, you want the stock price to go to like $11.99 and then just stop there, so you don't have to pay to roll and you get to collect all the premium. But the stock market doesn't give a shit what you want. So sometimes it'll every once in a while it actually does happen, and you're like, yes, this is like covered call nirvana. But for the most part, it either just stays low, which still works out because you collect all your premium and you just sell another covered call for the next week, lower your cost basis, reinvest the profits if possible. But then just as often, it may exceed your strike and you have a decision to make. You either let your shares get called away and then you can repurchase those shares, or that basically just amounts to just paying to roll. So if you're just gonna buy the shares back anyway, then just roll it. Like if you want to keep the shares, just pay to roll it. And so that's what I did for Hut, but I did not do that for Riot. I'm going to just let that marinate another couple of weeks and collect whatever theta I can. And maybe as this gets closer to expiration, the value, if this is in the money, the value will actually start to become the exact dollar amount over the strike. So right now, Riot is $11.87. That is $2.37 over the strike price. So that's the intrinsic value of this option right here, the 237. So between the distance from 237 to 276, which is about, let's just say 40 cents, that's the extrinsic value. So that 40 bucks is the amount that I can collect if I just let this sit here. And as this approaches May 31st, if the price of Riot is still $11.87, then the price of this call will drop to $2.37, the distance between 9.5 and $11.87. So it'll just be a little bit cheaper for me to roll. And since I have such small amount of buying power, I don't want to pay 200 bucks to roll it today. I'd rather pay 200 bucks to roll it on May 31st, and I will have collected a little bit of extrinsic value here, and in 3 to 4 weeks I will have sold 3 or 4 covered calls of Hut, 3 or 4 more covered calls of Riot, 3 or 4 covered calls for each of these 100 shares of Mara. So hopefully my buying power will have increased, and it would be nice if MicroStrategy would pump as well, since I've got almost a share of MicroStrategy on this account. What I would normally do with the profits when I roll these is I would buy extra shares of Hut, since that's the cheapest one, and I would try to get this account to an extra 100 shares of Hut as quick as possible. But what I'm doing here, because I kind of think that saving in MicroStrategy is kind of like a little bit of a cheat code, because over the next year and a half, my basic assumption is that MicroStrategy is going to, I would say, like hyper bear case, I'm saying like 5x. So like bear case 10x, and like bull case, I don't even want to like speculate. I already said not financial advice, but I don't know. I might have to say it like 10 frickin' times during this video. But MicroStrategy could go to 0 and stay there, but my assumption is not that. But any stock at any time can trade sideways, go up or down, and we don't get to decide when or how much and in what direction. So trade within your bankroll. Yeah, so I got the 9.5 all for next week. I got the 9.5 Hut, the 22 Mara, the 21.5 Mara. I'm still stuck with this 9.5 531 Riot, and when I set up this 5K account, I had like a half dozen leaps in Tesla, and I was like, I didn't want to sell them. This really isn't part of the strategy. It actually could be, but I just kept these Tesla calls here, and every time it gets cheap, I'll maybe buy 1 or 2, and maybe Tesla will pump before January 2025. I am still a huge believer in Tesla. I believe that they're disrupting. They've already disrupted the EV space. They're going to continue to disrupt. They're going to put basically everyone out of business. And I listen to Stephen Mark Ryan every day for daily Tesla hype, and I'm going to have to agree with him. And he basically says that the companies will go bankrupt in reverse order in whether they have agreements with Tesla. So if the like Ford was one of the first, maybe was the first to sign on to Tesla's charger network. So they'll be one of the last to go bankrupt. And I'm guessing they're the ones that Tesla, Elon Musk let slip that they were in talks with a company to license FSD. And I'm going to go out on a limb and bet that that's Ford. So if that's the case, Ford probably will be the most likely American car company to not go bankrupt, like first. They'll they may just go bankrupt last because there's diehard Ford fans that are gonna, be alive for the next 20 or 30 years, and so they may get a stay of execution because they're partnering with Tesla, and Tesla may, give them some favorable deals for being early or whatever, or maybe just because, I don't know. Elon Musk seems to have a little bit of a soft spot in his heart for Ford. I think he's mentioned that Ford and Tesla are the only two American car companies not to go file for bankruptcy. And I think he has spoken highly of Henry Ford and the way that he, basically, I don't remember, I can't think of the word exactly, but he revolutionized, the factory process and churned out the Model T and all that jazz back in the day. So I think he highly respects Ford's legacy, and that may be one of the reasons why he's willing to partner with Ford. And Ford's CEO, is it Farley? He's got to be the best car CEO not named Elon Musk right now. And the other guy that was up there was from VW and got fucking fired. It was hilarious. So everybody else is doomed except for maybe like BYD. They'll probably be the number 2 spot. And I talked way longer than I intended to on this one, but I guess I love to hear the sound of my own voice. But yeah, so these were the trades. These are, can't wait to see MicroStrategy, what it does Monday night. I'm on the edge of my friggin' seat, and it would be nice if the stock market gods smile down upon me. Yeah, but this definitely highlights. So, my account probably could have gotten much closer to where it started. I'd probably be back to almost even if I had just not sold any covered calls on this account at all for the last however many weeks. But that's kind of not the point. The point of this account is to demonstrate the strategy, and any strategy can suck short term. So this does, I don't love that this is down 20% from where it started at 5K, but it also was just par for the course. It's not really anything to worry about. So I will continue to sell covered calls. I will continue to stack those profits in MicroStrategy every week. And then at some point, I fully expect, it may not be this earnings call, but at some point, the market is going to have to face facts, and MicroStrategy will appreciate. And when it does, I will sell off some of this. I'll buy 100 shares of something, and will accelerate the amount of premium that I collect every week by selling more covered calls. And then by selling more covered calls, I'll collect more premium and buy more shares and more MicroStrategy. I'll just keep dollar cost averaging into MicroStrategy with the profits from selling the covered calls. And eventually, I still think I could probably get this account to 25K in 4 years. That was my initial goal. So I'll try to 5X it in 4 years. That may not be exciting to the trend followers and the momentum traders or whatever, and day traders, but for a very safe and minimally, just minimum time commitment. I did a speed run the other day, and like I rolled all my covered calls in like 2 minutes flat. So it definitely does not take as long as I've been yapping and running my mouth to just roll and sell your covered calls. And so, I mean, max 15, 30 minutes every Friday just to sell, just to roll the covered calls. And every time you do it, it adds a little bit of downside protection. Of course, it does limit maximum upside, but that's the trade-off. And hopefully this account will show some more forward progress, and I'd like to be able to show off some gains at some point sooner than later. But definitely, I think this strategy does win out over time, and we shall see. All right, that's it for now. Be good, Joe.